Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Canoo, ticker symbol GOEV. And so here we are looking on the weekly chart, and over the course of the past week, Canoo went down almost 18%, a pretty big red week, hitting a low over the course of the week of 10.44 cents, which is surprisingly just a little bit higher than a level that I had suggested price might go to last week. I had suggested in that video that 10.30 cents might be hit, thinking of that as like an extreme downside. I did not expect price to get so close so fast, but I am glad that I did caution to the downside because that is exactly what we saw. And so as we look at the closing price from Friday, February 23rd, 11.57 cents at the close, not being down too much on that Friday, but being down a lot over the course of the week. And so I just wanted to take us over the daily chart to look at some of the things that do stand out to me that were kind of a tell in the big down moves and also, a good exit sign. And then also with this candle that we do see for Friday, that's actually more of a cross or a dragonfly doji or a hammer candle. And so with that, although it is very thin, opening at 11.5 cents and closing just a little bit above that at 11.57 cents, as we know. And so with that being at the end of this downtrend, that does suggest that we could be seeing a reversal. We do have this very large bottoming wick that could suggest that is a bottoming tail from that trading during the day, from that candle. And it does look like buyers have been stepping in below about $11.57. And so with that being at the base of this downtrend, this could be a bottoming signal. Also, I do think it is encouraging that we got a close above the low from Thursday, which was 11.27 cents. So closing, 30 cents above, 30 fractions of a cent above that is good, but it doesn't look so good that we did hit an all-time low of 10.44 cents on Friday. But I'm just going to throw up the drawing so we can go over some of the levels. Really, what stands out to me that I was, excited about initially, but then I realized I needed to be a little bit cautious. So I did have an alert here at 13 cents. And let's see, when that went off, that was on this big red day when we broke below and closed below that orange downtrend. And so rather than jumping into a position, because we did close at the bottom portion of that candle, I decided to be cautious. I wanted to see confirmation of the breakdown or get a test and breakthrough of this level, a rejection of the breakdown. And so what we ended up seeing was a continuation to the downside, actually a rejection from exactly at that downtrend and a lower close, not only closing below the previous day's close, which was Monday the 20th, closing at a price of 12.84 cents, not only closing below that, but the low of the day, 12.6 cents. We closed at 12.51 cents on Wednesday. So, that was confirmation of a breakdown that price would continue lower because we closed lower than the previous day's low. And so that made me realize, 13 cents is cheap, but I think it's going lower. I do think it's going to be coming to these 1618 levels, with one being right around 12 cents, the other being just above 11 cents. So I was waiting for those to get hit, and I moved my alert to 11 cents. And so that was hit on Friday. Let's see, the low on Thursday, it was 11.27 cents, so almost hit, but not quite. And so I wanted to evaluate after hitting 11 cents. And so what I see in the chart, which could be negated tomorrow on Monday, February 26th, but what I see is that on Thursday, we tested the 1618 at 11.37 cents, and that acted as support. That's great. We closed above that level. Then on Friday, we broke below it again, breaking below 11 cents a share, setting off my alert. I was alerted and I was contemplating, do I buy some at 11 cents or maybe 10.50 when I was looking at the chart? It could be a falling knife. Don't chase it. I waited. And now looking at this, evaluating it with the complete data from Friday, seeing this candle, it does suggest to me that 1137 did act as support. This 1618 retracement or extension of a Fibonacci is significant, and that is from this retracement here, as you can see that down there. And so that does seem like it served as support. Also, we closed not only above 1137 on Friday, we closed above Thursday's low by 30 cents. So that tells me this level, 1137, is indeed acting as support. But, I of course could be surprised on Monday with a continuation down. So I want to see how it's trading in the pre-market, maybe evaluate that. But I could see this as being a bottom, and that this big tail that we see coming down from that very thin candle, that to me is a bottoming signal. It seems pretty clear. Also, there's so much panic. You can feel the tension around the stock right now. Is it going to go lower? 1030 wasn't hit, which I thought it might be. Or, coming down to this, wedge line that I have down here, the white downtrending level, that could bring price to 8 or 9 cents if we were to retest it. There's a lot of panic there. I don't think that's where we are going. And one thing that I can do, because I do think that we have hit the bottom, I'm going to do this here rather than have it pre-drawn up so we can kind of evaluate together. I'm going to do a retracement from the high here, which was 22.19. See if I can get that lined up just right. A little bit off. And then here, 1044. Oh, I'm going to have to adjust this. All right, so now that's adjusted perfectly to the bottom there. And so what we can see from this is it looks like the 236 is at a price of 13.21, and that does seem to coincide with the orange trend line here, although moving forward we would be lower than that, but that also does coincide with the break of that level, so that would be like returning to the scene of the crime. So I could definitely see price returning to this orange trend line and potentially getting to around 13 cents. And then above that, I do feel like getting to the 382 right around 15 cents at 14.99. I think that's going to be a pretty key level to get back to. I do think it's going to be a tough one to hold. As we can see, just below that, we start to see this volume shelf pick up because of this consolidation here. That does actually look like it was bearish consolidation. Buyers not stepping in here, and then this big drop down. Tough to have recognized that though, but easier to with this big red candle here. And then just above 15 cents at 15.5 cents here based on the low before this run up, we do see a lot of consolidation above that level. So I do think getting back to the 50% retracement at 1631, I do think that's going to be tough, but I do feel like we are at or near, very near the bottom, and the bottom could be in at 1044. And so based on the candles that I see here, based on what we're looking at in the chart, that's what I'm expecting. I'm expecting the bottom to be in. Also, we do see that volume did go down, even though price went lower. So if price and volume are both going down, that means that we could be seeing a reversal to the upside. So that's what I'm hopeful for, and I'm going to evaluate this tomorrow to see if I want to pick up some shares right around 11 cents or maybe 11.50. But I'm going to wait and see. I want to be cautious with this one. But I do think it looks like the bottom is right around the corner, if not there. So I'm hopeful about that. I hope you are too. And if you found this helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.